there. But the stock of the day is Selfwealth. Well, today Selfwealth responded to media speculation around a potential deal with Stake. So it's disclosed that Stake did make an offer for the company for 17.5 cents per share. However, Selfwealth's board refused to engage with Stake, saying that the proposal didn't offer value to its shareholders. But off the back of that speculation, and I suppose, speculation that there could be an improved offer to come, the company's share price is up more than 20% at this stage of the session. So thanks to my guests, it was a suggestion for stock of the day, and I like it a lot. Of course, it's a trading platform. It's a share trading platform, online only. So let's get to Luke Winchester. Let's get your thoughts on Selfwealth.
Yeah, so we've got two things to discuss here, I guess. There's the fundamental business of Selfwealth, and then the potential M&A and how that all plays out. It's always interesting. You think about this. This came out in the AFR this morning. How does it make its way to the AFR, and sort of why now? It wouldn't surprise me, if Stake is sort of using the bid to maybe put pressure on the Selfwealth board. There's some long-suffering shareholders who may wish to sort of grab whatever value they can, and the share price today helps them do that. But as an operating business, so Selfwealth's a discount stockbroker, and really did well in that COVID retail boom period. If we have the 5-year chart in a second, we'll see that. But that's now done and dusted, Nadine. I mean, those retail traders who piled into the market, when we all got our stimmy checks and we're stuck at home, they've now exited, and you see that in the statistics that Selfwealth puts out. They've managed to keep their active accounts, but the level of activity and trading and cash balances have all fallen very steadily. What saved the business, though, is they're able to collect a difference on the interest that sits in those clients' cash accounts. So, you may have 50,000 sitting on Selfwealth and 45 of that invested in equities with 5,000 cash. And of course, Selfwealth are able to park that in a cash account, collect interests, and pass on 10 basis points or sometimes nothing to you. And that's really saved the operating results of this business over the last sort of year or so. I am actually quite negative on that, though, and I think I view it a lot like the insurers, where you get a short-term boost from interest rates rising and being able to sort of skim that difference. But over time, the competitive nature of this industry eventually kicks in. And as an example, I mean, I am on an email list for Interactive Brokers, which is a US-based brokerage firm. And they're advertising 5% on clients' cash balances. So they're passing on the full sort of interest rate differential. And I'd expect, local players to over time do the same as they look to sort of grab whatever market shares left and consolidate the space. So I don't think that's a great moat. I think the rest of the business isn't doing too well. How do you reconcile that with a takeover bid, and is it worth more, and how will this play out? It's actually really hard for me to say. Usually with stuff like this, I take a little bit off the table. You've had a takeover bid come in, admittedly knocked back. The share price has bounced, though, so you can sort of take some off, lock some in, and maybe continue to hold and hope that Stake comes back, or someone else. I mean, this is a space where there's quite a few players. I mean, CommSec by far is the big gorilla in the jungle. It's a space that should be consolidated over the next few years, and it doesn't surprise me that industry players are sniffing around Selfwealth. So the board holding out for a higher bid, I think, is actually quite a reasonable tactic from that point of view.
Mm-hmm. I got it. Claude, what's your view on Selfwealth? Does anybody else have a hard time saying that three times fast? My goodness. Claude.
Shareholders of Selfwealth, that it's up to that. Like, they're kind of in a position to maybe block or have a bit of a shareholder rebellion, even if the board did agree to too low a price. So I don't see them necessarily selling out, even though that, in my personal opinion, it's not a stock I'm long, because I don't think it's the best quality business. It's very hard to make a sustainable profit and grow, because it costs a lot of money to acquire customers. But that's my take on Selfwealth.
Sorry,
while it's still fresh.
So you'd be holding it if you were a shareholder because they're likely to get a better offer?
I think they're likely to hold out for a better offer, which probably doesn't necessarily mean they'll get one, but it probably does mean that it might be one of those take some profit situation. But at the same time, I would probably still hold some, just for that potential chance that you get a higher offer.
Yeah, all right. Well, you guys do agree on that. So there you go. Nice to have you here with us today, Claude.